been 4 weeks since my last video, and I know that's extremely long, but I'm back. I'm back with another video. Hope you're all well. Hope you have been keeping sane throughout these market conditions. I know it has been a fairly boring February. We were off to a crazy start with all central banks from the Fed, the Bank of England, and the ECB all coming out in the beginning of February with their statements and their adjustment to rates. But I'm going to break that down in this video. I think there's a lot to cover, especially with what's going on in the economy right now, where I see dollar next, probably the most important, because if we know where dollar is, we know where everything is going. Stay tuned in the video for further updates. See you there. Right, starting on dollar. If you haven't watched me and this is the first time you're watching me, dollar is everything for me. I spend a lot of my time and my energy focusing on the macros, focusing on where something should be trading, and more importantly, why it is where it is. If we understand why it is where it is, we understand why it could possibly go in a certain direction. It gives us a higher probability to capitalize on a move. Now, dollar was fairly range bound at the start of the year, throughout all of January, as the markets were looking forward to that big FOMC meeting at the start of February. However, we have obviously had a bit of a recovery. Why? A lot of the data has been coming out very, very strong for the US. You've got the jobs market, which was a non-farm payroll that came out on the first Friday of every month, which came out on the first Friday of this month, showing the jobs added in January was 517,000 jobs. That gave us a nice little lift. We need to really step back for a second and ask ourselves, why are jobs so important? If everyone has jobs, they're going to continue to spend. If people continue to spend, businesses have that money coming in. If businesses have that money coming in, they can continue to hire staff, they can continue to grow, they continue to expand. Right? That provides optimism. If people are getting jobs, there's optimism. If people are losing jobs, people are getting fired, people are getting retrenched, there's a lot of fear and there's a lot of uncertainty. And that uncertainty and that fear prices negatively into the currency. So we have had a good little rally and a good little lift in the dollar. And now what this does is this changes market expectations. I'm glad you're enjoying this video so far. Don't forget to click the link in the description below. Join my Discord. There will be an option to upgrade the Discord to have access to full live sessions with me every single morning, along with a community of traders worldwide. I look forward to seeing you in there. Enjoy the rest of the video. Right, so if you have a repricing on the Fed funds rate and where the market sees dollar actually going, or where the market sees the interest rate going before it stops, that is truly what gives dollar direction. So looking at dollar overall, if I have to just explain this in a nutshell, the market rallied, right? Last year, once the Fed were hiking the fastest pace of hikes they've ever seen, right? The Fed had to then go and slow down the pace of their hikes as they were getting to their target, right? Strong labor market, unemployment still firmly at 3.4%, which there again makes up one half of the Fed's dual mandate. The second being inflation. Inflation started to cool off the highs. Is that going to last? No one really knows. So only time will tell. And with market repricing or the expectations repricing in how far the Fed are going to take interest rates, that's what actually has caused dollar to capitulate, cryptos to rally, equities to still remain firm. So we're going to get into that in a second. But looking at where dollar is, it's important for us to know, okay, super strong data in the US. You got a firm Fed. Jerome Powell, extremely firm. He does understand and does view the fact that inflation is starting to slow down, but pressure from the Fed is still needed. And there again, you've had the likes of Bullard, Mester recently, extremely positive / hawkish, right? If someone is hawkish, they are confident, and confidence prices in positive to the currency. So we have had that lift. And looking at dollar on the lower time frames, we can see, which I've highlighted over here, something that I spoke about, or I continue to speak about every day on my live calls that I do every morning, that these dips in dollar keep getting bought, right? These dips in dollar keep getting bought. So no matter how much sellers there were at these prices, those dollar dips kept getting bought. Why? there is no alternative. Right now, there is no alternative to dollar. If there is a repricing up from market expectations, dollar is going to be higher. Risk is going to be lower, right? Because the market's repricing in, Fed being more aggressive, that's putting equities lower, gold lower, right? Looking at gold briefly, gold out of those 1950 highs, and it's been a slippery slope ever since. This is because of that lift in dollar, right? You've had this massive rally in January and this massive capitulation in February. Why? A simple repricing on market expectations of what the Fed are going to be doing, right? Interest rates are extremely high at the moment, 4.75 in the US. How much higher for how much longer before they pause, before they pivot? But that doesn't even mean, right, this fight is over. This risk fight is over. You know, people are calling the bottom in the crypto market without really viewing what high interest rates will do to the economy. We really need to think that the economy as we know it has been built up and propped up by low interest rates. Since the 2008 meltdown, interest rates have been low. Money has been cheap to borrow. It's not going to be like that right now. So you really want to put things into perspective and ask yourself on which side of the fence are you actually on. So gold, has been on a perfect little slide to the downside with this little shift that we have had in dollar. So for myself, if I look at this on the daily, I do favor a further rally in dollar. I'm looking at least 105 on the dollar index this month in February. Now, looking at the daily, we can see there was this massive daily level over here that was broken back above, right? Despite Friday's reversal candle, I personally still favor buying the dips in dollar. And buying the dips in dollar for me does line up with the round psychological level of 103,500. It lines up with our fib on the lower time frames on the 4 hour, the 2 hour. We have broken several highs. So personally for me, I'm going to be looking at buying dollar dips. I will be looking to take this up to 105 and then literally looking and seeing how the market reacts at 105, what the Fed have to say, you know, further comments leading up to it. We do have the Fed meeting minutes that's released this week. If you're not aware, the meeting minutes get released 2 weeks after the event, purely just to run through and summarize the event as a whole. So do expect, in my opinion, the markets to perceive that bullishness from the meeting that wasn't priced in at the meeting, right? It was not priced in on the meeting. The market still was fairly range bound on the meeting, and dollar actually fell ahead of the meeting. So I do expect that lift on dollar to continue to price in. It is just a case of where we actually take advantage of it. So dollar is my first sort of point of call that I look at. Second being gold, right? If we do have that little rally, that decline, on dollar back to 103.50, we could be looking for that rally on gold, possibly into 1855, probably my first area of interest where I would signal for a possible short on this. But anywhere into 1850, anywhere into that area, I do favor it being a valid area to short from. We can see over here, this was a big build up on liquidity where the market was range bound for a while before the rollover to new lows. We have now revisited ourselves in there, and it is currently a bank holiday in the US and markets are shut. Don't expect much volatility to happen tonight. Possibly Tuesday, Wednesday, we should see a nice little pickup in volatility and volume. So gold possibly back into 1855, and I'll be looking for reversals for shorts from that region. The S&P 500, good little favorite of mine. I capitalized on this last week. We called a short in my live sessions that I do in the mornings. And there again, if you're not aware of that, click the link in the description below. Join my Discord. There'll be more information on that. So looking at S&P, we had a nice little sell-off from 41.40 last week all the way down into these equal lows. Now, I am personally still looking to sell the rallies on the S&P. I favor it. You know, I do favor risk being on the back foot with the Fed still applying more pressure. I don't think that's gone away at all yet. So still looking for that. Still looking to possibly sell the rallies, the weekly, you know, the daily, all exhaustive, all extremely slow up into the high. So my personal opinion is looking for that risk reward, wherever that risk reward may be. So possibly looking to sell the rallies on the S&P. And My first area of interest is 41.15. So should we come back into this fib area, then I do favor it. Let's go to the hourly. There we go. I do favor it coming back up into these wicks over here. Right, anything into these wicks or in and around these wicks and our 61.8 area on the fib, I do favor the short on that. We can see that every little dip on the S&P keeps getting bought. So I do feel this dip that we have had is more than likely going to get bought, and we are going to come back up into this area. This then gives dollar a chance to correct back into 103.50 to then fully capitalize on that. And there again, folks, your main idea and your main goal should be to figure out where dollar is going. If you know where dollar's going, you can short euro, short cable, short the Aussie, right? Buy dollar CAD. That was very evident last week. Short the euro as well, of course. We took advantage of that. You know, looking at euro, there was a perfect capitulation to the downside on that one. Aussie, same thing. Beautiful sell-off last week, coming to touch our target. If you just look at that, all right, A, B, C, D, straight into our target. Fairly simple, fairly easy. Once prior lows are breached, usually lock in those gains because the market can, they're going to reverse, right? Can reverse. Just because you're holding out for a longer target doesn't mean it's going to get hit. And you sitting with money left on the table, which is a waste. So looking at the yen pairs as well, dollar yen, you know, still fairly firm, straight back up into the highs over there on dollar yen. I favored it lower at some point from the 61.8 and the 78.6 region, but given a dollar firm scenario, we have had this edge higher. Something that you have to know if you are trading the yen pairs, there is a new Bank of Japan governor coming into power very, very soon to replace Kuroda. Right, Kuroda was the most dovish central bank member or governor I've ever seen, right? Printing money at every opportunity that he got. So do expect Kurodanomics to be thrown out the window with a new Bank of Japan governor stepping in, and do expect further tightening to come into wrap. Right? If you haven't really looked into it, please look into it. Inflation in Japan through the roof. All this money printing doesn't come cheap, and that has to go somewhere. And Japanese inflation is really, really feeling it right now. So if you are trading the yen pairs, do understand that with all this money printing, that weak yen is going to feel it right now. But the minute that new governor steps in, do expect a hawkish, very positive, very strong, affirming governor to take his place. And that is going to give us a strong yen. So I'm personally going to sell the rallies in the yen as and when that happens. But it's not ready yet to do so. Euro yen, pound yen, more than likely your better bets right now if you are looking to sell the yen pairs. I know pound yen has been a good one to us these past few months, literally selling the rallies on pound yen. And we have there again been stuck in this range. Or we have been stuck in this range. So if I have to just look at it and ask myself, fine, if we have a firm dollar right now, and we do have the yen suffering a bit of a beat, should these yen crosses go a little bit higher ahead of the new Bank of Japan governor stepping in, right? Pound yen happens to be a better risk reward for me. You know, should we come and see 164 is a major area of liquidity here, right? So I'm not going to take away from the fact that we're struggling to break where it currently is. But I'm also not going to ignore the fact that 164 happens to be such a good level for the pair. And there again, should you fib it from the high to the low, it lines up perfectly with that 61.8 area. So I'm going to go ahead and even add an alert with you all on this call, on the Zoom call, on this YouTube video. Sorry, not a Zoom call. Should we come back into 164? I want it. Right, I fancy it up there. I like the risk reward. I do favor pound lower. Right, the pound's gone to shit. And I do favor yen strength once we have that new Bank of Japan governor, as I do expect Kurodanomics to be thrown out the window, which is something I would do if I would, or if had I stepped in. But we want to really think about politics in general. Whenever you have a new political person coming into wrap, they're always trying to speed things up. They're always trying to do, you know, better than their predecessor so that they can look good. So yen crosses lower at some point, more than likely into March, once the Bank of Japan governor gets replaced. I'm not even going to try pronounce the new person's name, but I'll make sure I put it somewhere in the video for you to be aware of that. But shorting the yen crosses as and when the time is ready to do so. So buying dollar dips, selling risk rallies, and then looking at the likes of Bitcoin. Bitcoin has been on the steep rally to the upside, now trading back above 25K on Bitcoin. I do think, this has been a bit of a relief rally. It has been a lot of short covering that has taken place due to, that mass capitulation throughout 2022, right? Every little bear market is going to be succumbed by this little relief rally, and everyone's calling the bottom, right? Everyone's calling the bottom. Everyone's ready for the bottom. I think, if this was the bottom, we would have had one last little washout, and we haven't really had that yet. We've already overcome the FTX scandal. FTX scandal happened when Bitcoin was trading at 21K, right? Had a $4,000 drop, and all of a sudden we've had this massive rally as if everything's perfect and as if there's, moon, sunshine, and rainbows, and everyone's living in a happy place. But we know that's highly unlikely not the case, right? I'm not going to stand here and sound like a perma bear, because I'm not. I'm bullish on the space and bullish on what Bitcoin can bring, what cryptos can bring. However, there is still something that is holding me back from literally going all in right now, as I don't think the bottom in risk is in just yet. I do think, with central bank, especially the Fed, central banks across the world, continuing to tighten their policy, regardless of them slowing and lowering the pace of their hikes, they're still tightening their policy, right? QT still taking place. So I do just think, once there's a lot of recession fears continuing to be priced into the markets, there is going to be that further leg lower. So I'm still waiting personally for that right shoulder in Bitcoin. I do think we are going to head back below 20K at some point. Do I know when? I don't have a fucking crystal ball, right? If I did, I would tell you, but I don't. So for me personally, if I had to, look to take a short on this, I would just say 28,500 is a good level, right? Technically, it makes sense. It looks aesthetic for us to have that pop up before that continuation lower. But in terms of it being, or me being super bullish, I'm not super bullish just yet. I do think if you want to start buying, anything sub 20K would be your point of call. But yeah, should we get that right shoulder? That would be perfect, in all fairness, to have that right shoulder over there before then loading up. Same thing that we had, in 2019. We had that initial recovery. We had that correction during COVID. And then we had that massive rally once the Fed started printing again. And, I don't think, in terms of economics, I don't think the Fed are going to be printing anytime soon. They may pause. They may lower the pace or continuing lowering the pace. But I don't think that, I might look back on this video in a year from now and laugh at this, but I don't think the bottom is in. I'm still a long-term bull in the space, but I just think if you really want to capitalize and fully lock down in your gains, you want to be looking for dips to buy. And that being in the same with Ethereum. Ethereum is stuck right now at these highs. I do favor it going lower. I'm looking to take some shorts on this once it breaks 1600 again. And XRP as well, 35 cents still is a good little level of support. I do think we're going to have one last attempt at 35 cents, if not lower, right? If not lower, if this spike gets filled to the downside, we could see 25 cents, right? But there really has to be something, somewhat of a black swan event for there to really be a full capitulation or full washout. So it's something we're going to keep in mind. You really want to look at the market as a whole and ask yourself, do you want to be buying when everyone's buying? Or do you want to be buying when people are fearful and people are panicking? And you know what, to be fair, if you caught this bottom post FTX crash and you actually had faith then when no one else did, that's a perfect buy signal for you, and good job to you if you did that. You're up about almost 10K per Bitcoin, or 8.5K per Bitcoin. It's very, very good job to you on that one. I'll definitely say lock in some gains, right? No one ever went broke locking in some gains. and just look to add that money back in once we back below 20k, which hopefully we are. And yeah, if we're not, we may have this rally into 28 and then short from there, right? Short from there. But I do think at some point we are going to have that correction when no one's really ready for it, when no one's really looking for it. I've really seen these washout events happen in the markets, and it catches people with their pants down. So make sure that you're not one of them, right? Be ready for it. And yeah, that's pretty much it from me, really. Looking to buy dollar dips, looking to sell risk rallies, and selling the yen pairs as and when they're ready to do so. But that's pretty much it for me. Just know that everything in this video is my opinion and not financial advice. Click the link in the description below. Do like, comment, share, subscribe, all good stuff. And I'll see you on the next video. Take care. Bye-bye.